I'm Rory Finnegan. I'm CEO and founder of Beyond Accounting. Cash flow is really important in businesses, particularly with the younger businesses or businesses that are growing. In some ways it's more important than profitability because that's why businesses stop. It's because they run out of cash. They can't pay the revenue or they can't pay their salaries. The important thing about cash is that you can solve cash flow problems if you do so in a managed way. It's very difficult to solve a cash flow problem if it's immediate, as in we can't pay our bills on Friday. It's too late. Whereas if you know 6 months out that we have a requirement for cash, you can actually, there's a lot of cash out there. You can get bank loans, overdrafts, you can get investors in, you can change your policies around credit. There's a lot of different things you can do to make a viable business plan going forward. The thing is to do it in a managed way and have good foresight as to what's going to happen next, and don't allow these things just creep up on you as a big problem, because that's why businesses stop. We recommend that companies will have between 3 and 6 months cover on costs at any point in time in funding available to them. So what that means is if you didn't make one sale between now and 3 months time, you can still pay your bills because you can use your overdraft, or you have cash, or there's some liquidity in the business to pay those bills for at a minimum of 3 months. So it's very dangerous to run a business tighter than that, because there will be variations. You will get a customer that was meant to pay you one day and doesn't for a little bit longer, and it's not sensible to be running a business on those narrow margins. Beyond helps clients manage cash flow by looking at the areas that cash gets tied up in a business. So the two main areas that ties up business cash are your receivables and your stock. So receivables, you've got to make sure that you've got the right credit policies and that you have good mechanics around collection of your invoices that are outstanding from your customers. So there's some really good technology out there for collecting things by direct debit, automatic reminders going out, automatic invoices, that allows you to be very efficient in terms of the amount of credit that you're giving out there. And also in stock management, there are very good systems around managing stock, that you're not holding too much stock, and that it's good turnover on your stock. They're two of the kind of main areas where cash gets soaked up in a business. Every business that's growing and has plans for growth should have a 3-year business plan that they update at least annually. And that will show in the cash flow forecast when there's requirement for cash, when the right time to invest in new people or new resources is, and we'll answer those questions in a sensible way. Where there's a requirement for cash, there's plenty of places to go. The banks are dying to lend money at the moment. There's a lot of investors out there. There's Brexit loan schemes. There's the local enterprise office. There's Enterprise Ireland. But you have to do it in a managed way. So you're saying to people, look, we need to raise money at this point in the future. Let's start the process now.